Good afternoon, everybody, and welcome to our webinar with Financial Mail. I'm really excited. We've got some really cool people in the house. We've got our Financial Mail team, Giulietta and Rob. We've got our Crystal Challenge winners. We've got Chad and Charles and some in-house EasyEquities peeps, me and Cay-Low. And today we are talking about, well, we're actually just shooting the breeze. We're shooting the breeze on our favorite stocks, what we're investing in and why, and then taking a little bit of a look at the community. What's the community investing in and what's sort of happening in the market at the moment that we should be thinking about? So I've written down kind of my stock picks, and like two of them technically aren't stocks. So we're going to see what you guys have to say about that. But I want to hand over to Cay-Low, my penny stocks obsessed colleague, because I'm actually just dying to know what his three top stock picks are. Cay-Low, are you going to tell us? What are you buying and what are you selling? Is there anything that you're selling?
Well, it depends on what we're looking at, Mara. In terms of buying, I would say that I'm actually looking at companies that might actually contribute to fighting the current load shedding problem that we actually have right now, which I look at copper, right? We understand that copper plays a vital role in terms of renewables and whatnot. So Orion Minerals is one of the companies that I'm personally looking at. And then in terms of short term, I would say Ellis is one of them. And just to be more biased, I'd say my long term is obviously Purple Group, like I would always say.
Obviously.
Obviously, And then, yeah, I think that's about it. Other than that, the one that I'd say I'm selling is copper. Not copper, I mean coal, right? I'm actually selling coal here and there. Because like I said, as you can see that the transition is now moving into renewable energies, coal won't necessarily be as relevant anymore. So that's why I'm actually selling off my coal stocks here and there. But in the long term, I would actually be more into renewables rather than coal.
So when you say I'm selling my coal, I'm like picturing you on the side of the road selling coal. So is there a specific company that you're actually selling?
So yes, there are quite a number of companies. I actually had a lot of companies because I actually had a strategy which was the 6 Cs. Well, yes, 6 Cs, which also included coal, cannabis, copper, chrome, cybersecurity, and cement, right? So now with that being said, if you look at the coal structure, we look at maybe MC Mining, Giulietta, and various other companies within the Australian market as well. So I am actually starting to sell those companies bit by bit. And then I think over time, probably next to maybe 2025, that's the time when I'll probably be out of coal, or so to say, selling the coal on the street, like you said, CB. So yeah.
Please don't. Please don't. I'm also now quite interested, before we go to our Financial Mail bigwigs, I'm interested to hear from our Crystal Challenge winners, because you guys have been in the thick of it in terms of strategically choosing stocks for your portfolio, and you obviously made some of the right choices because you landed top spots. So Chad, why don't we start with you? What stocks are you looking at the moment?
So to give you a bit of background in terms of my investing, I'm not actively investing at the moment, as weird as that sounds, but in a way investing, because I currently moved homes and I sold out of all my positions to get as much cash as possible. So if you use that as an investment strategy, you can see how I stand in terms of how I look at companies too. But in terms of my picks for 2023, and you could say as soon as I do buy again, that these are the first that I'll look at, is Sapaku, especially in terms of infrastructure development in terms of the country. We've seen PPC have quite a good run in the start of the year already. And then also have a strategy which Cay-Low probably will appreciate, is that to win the Crystal Challenge, you have to choose penny stocks. It helped me last year with Stefanuti. And I would say Sapaku is essentially my Stefanuti pick for this year. Look, it's when you look at a penny stock, you got to say, is the upside better than the downside? And look, you can get taken out, as the Avengers, as they like to call themselves, have seen. But yeah, so that's, I would say, is one of in inverted commas, my penny stock pick, even though it's sitting at R1, so it's not essentially a penny. Yeah, and then I've done basically a strategy where I've chosen what did success for me in 2022, and then try to correlate it into what 2023 is. So I've got Hammerson in terms of property, obviously UK based. I traveled to the UK in November and I saw what was going on there. And yeah, also in terms of your your entry point, in terms of when you buy a stock, I think that's a very underrated factor in terms of when you invest. You can see there's some stocks that if you bought 10 years ago, you're sitting flat. But if you bought 2-3 years ago, you're sitting 100, 200% up, which a lot of people really do forget about. And then that comes in, look, they didn't do me a favor last week, is Coronation. But I mean, they were sitting 15% up on the year before the legals came for them. Again, entry point. And also, yeah, they just got to beat SARS at it, I guess. And then my fourth pick, I would say Giulietta gave me a bit of influence as Altsurance. They've gone on themselves now on the JSE. They're actually doing the best out of my portfolio. I think they're about 35% up now. And you traditionally see on the JSE when one of these smaller divisions come out of a company, Financial Mail is going to have to remind me where Altsurance came out of. It's at Sunderland.
RMI.
RMI, that's the one. Yeah. And then my last one is Mr. Price. Mr. Price is a bit of a personal pick because, the Studio 88 group who just purchased end of last year is one of my main customers. So can call it inside trading if you must. But,
call it investing in the brands you love.
Yeah, so
a spot on strategy.
If you look at the Mr. Price results, they weren't great, but if there is one light shining in there, is the Studio 88 division. When you compare it, and also you got to look at these in comparison to other their competitors. Like last year, I chose Spa. I was a year too early, as it looks. Same story for what was my other one here, City Lodge. I was very tempted to pick them again for this year, but what do I have to lose? But maybe I should have in hindsight. So yeah, that was when you talk about strategy. Let me just go to my notes here.
He's even made notes. I'm very impressed with you, Chad.
Yeah, so I've written your entry point, and then there's one year that I'm sure a lot of people will see when it comes to Giulietta. The too good to be true that usually is in business. They're down. It's still a great company. I mean, I'm not taking anything away from them. But when you look at entering something for 11-month period, the Crystal Challenge is not a 5-year competition. So yeah, I mean, you can buy it as a 10-year view, but what's going to get you? I mean, what did the window end up getting? Overall 55%. So yeah, that's really where my picks came from for the Crystal Challenge. You could argue that my investment strategy is very different because I'm not investing for 11 months. But that would be a different conversation. Yeah.
Very interesting. Charles, I'm interested to know if yours are very different. Are they similar? Tell us about your picks.
Thanks, Carly. So from my side, I think mine is different. There's certain things that I can relate to what Chad said, but let me go to my stuff and give you a view. So my stock pick for this year is I chose First Rand. Like the brand, lots of recognition, cool stuff on the tech side. Also, the expansion in Africa and the growth in Africa and the UK, and also a good dividend stock. I think this year is going to be a tough year in the stock market, and I really went for stocks that have a good proven record. So first then I went for Mondi, and my reason for Mondi was, I think late last year, the stock lost quite a lot out when there was discussions around Russia and their Russian operations. But if we just look at the amount of packaging, I mean, many a time I sit in a meeting and then you'll get somebody saying, I'm just waiting for a delivery. It just shows that the great market there. And I went for something that's in Europe and also South Africa, so the international exposure. Then Thursday, I went for Afrimat. I think last year and this year, I go for some mining stock. Last year, I went for PPC. The reason why I went for Afrimat this time is Afrimat has got construction, but it also has the mining side. And it's doing very well with regards to the iron ore. And I see they're also now into coal. So for me, I'm excited about the brand. And I think it's one of those small mining businesses that I see one day growing into a big business. I think Chad said Coronation. I went with 91. And the reason behind that was just to say that as the markets are growing and people are investing more, these businesses have set costs and just looking at getting more revenue in as their assets under management grow. So that's why I went for 91. And again, the UK and South African play there. And last year, Giulietta did very well for me. And yes, this year it's under a lot of strain. I went for Exxaro. So I went for the coal play still because definitely there is a need for coal. We see with Eskom, we see with the international gas prices have gone down significantly, but there's still a big need for it. And also what I like about Exxaro is that the iron ore play. So I think it Kumba, so that's why I went for Exxaro, and I think it's quite a cheap stock at the current rate, and hopefully all these stocks will give us good returns. So I went for companies that I believed there was the necessary returns, but also based on their financials, they've showed great results and looking for potential. So I think when you select a stock, you also need to consider future growth and future opportunities. So with all these things, I looked at future opportunities. Yes, you need to look at the spot price, and maybe coal might not reach the heights of last year, but there's still definitely a need for it. And also the management track record. A lot of them, it's strong management teams with a lot of people that's innovative. So yeah, I think that's from my side.
It's so interesting to hear everyone's methodology behind their choices, some global exposure and diversification coming in there, taking advantage of industry opportunities. It's really cool. And I know, Rob, you've got some thoughts on load shedding and how that impacts these choices. I want to share with you guys my picks before we hand over to Financial Mail. My stock pick is Discovery. I'm a client of Discovery, and I'm seeing what they're doing with their new Discovery Bank. And I can't tell you how many people I've spoken to have actually said, I'm moving to Discovery Bank. It's just so cool and it's so interesting. So I'm liking what they're doing in that space. They are like innovative people. And yeah, I think it's exciting what they're doing. They've performed really well over the last 3 months in my portfolio as well. So I want to see if I can get some more of that. Then I'm not the biggest crypto fan, but I'm looking at the EC10. It's done really well. It's up over 50% just this year. And I think there's some interesting stuff happening with crypto. There's like a renewed focus on, or a renewed fashion on NFTs, which always brings back focus to crypto. There's a weakening of the rand, which also works in crypto's favor. So I don't have massive amounts of my portfolio in crypto, but I do like to keep a small bit there because it boosts it up when it's doing really well. And if it doesn't do so well, it doesn't have a huge impact on my portfolio. So yeah, I'm looking at that. And then my third choice actually isn't really a share at all, but I thought it's worth mentioning. I've invested in the latest property on EasyEquities called The Edge, which is student accommodation in Stellenbosch. I just thought it was really cool and interesting to have this alternative property type. So not a residential property, but student accommodation specifically, knowing that in Stellenbosch specifically, there's a huge demand for this kind of property. There's massive demand for more student accommodation. So I like that. And I like that there's a guaranteed rental for the next coming years. So yeah, I actually took quite a bit of my December money and put it into that property, The Edge. And there's actually another one that's coming onto the platform, or is already on the platform, called The One, also student accommodation in Stellenbosch, and it's also got guaranteed rental. So also diversifying my portfolio a little bit with a few different things, just like you guys. So let's hear it, Giulietta and Rob. What do you think of what's been said? What are the things that kind of stand out for you guys? And what are your personal, is there any stocks that you've got your eye on?
Rob, you go first.
Okay. I mean, that's really interesting, Carly, in terms of property. I think it's a lot of people are moving away from, I sold a house recently as well, because owning an individual property, I think, is a very difficult thing, but owning a sort of a wider scope of property, like through student accommodation, I think is not a bad idea. In the same way that, unlike a lot of people, I still quite like the property rates on the JSE. But just to go back to what Cay-Low and you were talking about load shedding, it's not just about load shedding right now. I think it's about the shift to renewable energy and what that means and who can benefit from that. Because I think that's a wider, longer term trend. And I think that Reuters, to me, is one of the better stocks out there that can really do something in this. I think they've really done quite well already this year, but I mean, they're not badly priced. I think they're on a forward price earnings multiple of about 10. And if you have a look at that division of theirs that basically owns the solar business, I mean, the operating profit was up 64% last year to 164 million. And I think there's potentially big money coming from there. And I think that Reuters in a good space. It's a business that can really prevail under the circumstances. And there aren't many areas of the country where you could say businesses are in a very sweet spot, but I think Reuters is in one of those at the moment. Continuing the same trend, I do think the banks are really quite cheap, some of them. I think I read a fascinating research report recently which said that there's the shift to renewable energy and the shift to deal with load shedding means that the banks stand to there's a R1 trillion opportunity for the banks to capitalize on through lending to this particular sector. And the banks with the biggest home loan books are the ones that are likely to do well out of this, which is obviously Standard Bank, ABSA, and Nedbank. And of those, I think Standard Bank has had they've had a couple of years where they underperformed, but I still think that Standard Bank at the moment is probably one of the better banks. They've already risen a bit this year, but I think Standard Bank, there's a lot of scope for the bank to rise. I mean, ABSA has been a favorite partly because it's been undervalued for so long, and I think the new CEO Ari Rotenbach is going to help refocus the bank. So I think there was recovery scope in ABSA, but in terms of a bigger bank that's got really strong tentacles in Africa, I think Standard Bank is really my pick on that. And then I think the third one would actually be probably the dullest of them all, but it's Remgro. I mean, Remgro has done some really good things. I think they're shifting things to, companies that you can't really buy elsewhere. And I think that, for example, there are two elements that I like about them. Firstly, energy. Again, they're invested in the energy exchange. And secondly, they're invested in fiber. They own, Dark Fiber Africa, Vumatel. And I think that division did fantastically well for them last year. And I think that's a real opportunity there. I think the revenue for that particular division, 15% to 5.3 billion. And the earnings from that arose massively. Operating profit was up 53%. And I think that's the scope for new technologies and I think Remgro is in a particularly good place in terms of that. So those, I think, would be my top three, if you allow me to include 1,000 other banks in that and widen it to include about 6. But yeah, I narrow it down.
You're allowed to do whatever you want within reason. Giulietta, what do you think?
Well, going back to Cay-Low's point about, I liked his 6 C's. And the fact that he was including copper rather than coal is quite interesting, because I spoke to Jan Nelson, who used to be the CEO of Pan African Resources, and they're actually bringing a new listing to the JSE. We haven't had many of those. It's going to be copper. It's called Copper 360, and it's going to list on the Altex, I think, at the end of this month or maybe in March. it would probably sort of float Cay-Low's boat because it's a junior mining company. They're going to raise a little. Yeah. But, Jan was talking. Okay. And the caveat, of course, is that mining CEOs are notoriously optimistic and they talk their book and they are pro whatever it is that they are mining. But he was talking about the impending shortfall in the copper market, given for example, Europe's push to electric vehicles, the amount of copper used per electric vehicle. And this is notwithstanding the copper used in alternative or green energy infrastructure, not to mention America's drive to juice up its infrastructure after decades, essentially, of letting its public infrastructure fall into a state of disrepair. And there is not enough copper. There hasn't been enough copper exploration in the last decade or so. Some of the big mines in Chile are moving underground. They're coming to the end of their open cast mining lives, and they've got very low grades, which is a problem for them because you can't mine economically. So there's going to be this, I think, focus on copper assets around the world. And we actually have these huge copper deposits in the Northern Cape. So it goes to Cay-Low's points about Orion Minerals. I mean, that's pretty speculative. Copper 360 when it comes to the JSE will be pretty speculative too. But I love a good story. I love a thematic kind of story. It can burn me badly sometimes. Consolidated Infrastructure was a company that I lost lots of money on because they kind of went into renewable energy a little bit too soon and they blew themselves up by taking on too much debt and kind of getting into real pickle in Africa and then betting on the renewable energy infrastructure push in South Africa. And then, of course, Jacob Zuma happened and that killed it. But Copper 360 is the company I would be quite keen to look at when it does list. And Glencore was one of my picks again in the Crystal Challenge this year. I'm feeling a bit stupid because it did really well last year, okay? It was one of the top performing mining stocks, but they've got a big copper operation and they've also got the coal business. Glencore hasn't really done anything yet to date. In fact, it's down a bit, but I'm hoping that that maybe it's going to kind of resuscitate itself later in the year.
Haven't they also just announced quite a big dividend that they'll be paying out? I think Cay-Low was telling me about that.
Yeah, but a lot of it, I mean, you actually saw, well, Glencore came out with results yesterday. There was a staggering, huge amounts of money in their marketing division, in the trading division, and in the mining division. But the shares came off. And I guess, goes to Chad's point about where do you buy into a share. I suppose if you had bought into Glencore at the start of this year, you'd not be feeling very happy. Maybe a lot of it is baked into the price already. But I would probably still stick with them. And if I didn't own them, I would seriously consider buying them.
I'm making all these notes for my own personal portfolio because you guys have made some really good points. One thing that keeps coming up in my conversation with investors is, there's a lot of talk about a recession, whether it's a light recession or a more intense recession, that's up for debate. But what are you guys thinking in terms of, are there potential opportunities? Are there potential principles that you can follow with the thinking of there might be a recession on the horizon? Should you change anything in your strategy? Should you stick to your guns? What are your kind of thoughts? We've all highlighted top picks for this year that we're looking at. So it feels like no one on this call is particularly put off by that thought, or maybe they've already adjusted their strategy accordingly. What are the thoughts around that? Rob, let's go with you. You look like you have thoughts.
I have no thoughts ever, certainly no usable thoughts. But I think that, what's happened is that you've had quite a long time of high inflation. And I think that in those kind of environments, companies that have a lot of debt tend to suffer. And you've seen that with, because people have had, very low interest debt for a long time and have been able to grow based upon that. And I think that what happened when interest rates started rising is that a lot of the technology shares, especially that weren't making profits and had large amounts of debt, got hammered a bit. And I think that in an environment that's uncertain, where interest rates are still pretty high and are going to be pretty high for a while, you want to make sure your debt is low. So I think, for example, Glencore, you saw the results yesterday. They paid down, I think, they had $6 billion of debt. They paid it down to 0.1 billion. It's basically, those guys are using this time to pay down a lot of debt. Glencore did some really good things in those results. So you have a recession. I think you'll always have defensive stocks, which will be like ShopRite. You saw inflation numbers this week, 13% rise in food costs. And that's staggering. And now is ShopRite going to be able to pass that on to the consumer? I'm not sure about that. So you could potentially have that hurting margins of some of the retailers. On the other hand, the food producers like AVI might do well. So you see things like that in a recessionary environment are things to think about. There's potentially an opportunity with food, but I think you need to get it right. And I think, as Chad mentioned, the timing is critical for these things. So that's my non-answer. But perhaps I'm sure somebody else has a better answer.
Carly, from our side, so I mean, the first thing with recessions is that people find a cheaper substitute. It's not really a cutting down, and especially in a consumer economy such as South Africa, guys don't really stop spending. As sad as that sounds, they just find something cheaper. If you look at the retailers, I mean, look, Woolworths is having a great run after getting rid of David Jones. But if a recession hits, they're going to be the first person in terms of the retailers to get knocked. Where do the guys go? They go to ShopRite, they go to Pep. Hopefully my Mr. Price they go to. So that's also something to take into consideration, in terms of the money is going to go somewhere. And also your high net worth consumer doesn't get affected by the recession. So when you look at a Richmond, I don't know if you guys saw the news yesterday that they actually in chats with the Caring Group. So, when you come into something like that, I mean, why would Rupert be chatting to this international conglomerate in fashion and jewelry and stuff with such a risk on the horizon? It's because it doesn't affect them. The only place you'd really see a Richmond or, Kerry and LVMH getting affected is in the East because, in the Chinese economy, everyone buys expensive goods. So that's what we saw when COVID hit. But as we saw in America, as we saw in Europe, everyone got richer as soon as the pandemic hit. So that's my two notes I made with regarding to the recession. That there is opportunity.
Carly, if I could mention, and it's not my work, it's the work of the finance ghost, who I know is a close friend to EasyEquities and is a fantastic resource for any investor out there. And he's written a really good column for us this week on defensive companies. And defensive companies is kind of what you want in a very difficult environment. But he talks about how you've got to look at the valuations of these companies. And that's also critical if you're talking about a recession-proof stock, is you don't buy a stock that you perceive as being recession-proof, like, say, a British American Tobacco. But if you buy it at too high a price, or even a Clicks, okay, and these are his two examples, versus a Giulietta, which was kind of a stock that was ignored by the market, suffered through very tough, it's an industrial conglomerate. It's at the sharp edge of South Africa's weak economy. And it just kind of doggedly put itself through, and the market ignored it. It sold its shares down. And if you look at Giulietta, Clicks, and British American Tobacco on a total return basis, which is important because in a recession, you want companies that are producing decent cash and that can also pay you a dividend, okay? Giulietta has bested British American Tobacco and Clicks astoundingly. In fact, I was looking at the stats on a 3-year basis. And Giulietta, if you take the dividend into account, so that's on a total return basis, it's up 86%. British American Tobacco, because of the dividend, it's actually down 5% over the same period. It's up 33%. And Clicks, I think excluding the dividend, on a 5-year period, is up 57%. So Giulietta was the company that did better, partly because it was trading at such a low valuation on the market. So look for stocks that have been ignored and that actually have prevailed through extremely tough operating conditions. And maybe those are the shares that you want to have in your recession-proof portfolio.
Oh, there's some gems that are coming out here. I haven't even heard of that stock. Now I'm going to go read all about it, not to mention Ghost's note. That sounds amazing. Are we thinking that there's any global opportunity? I'm always a fan of US stocks. It's kind of like one of the biggest portions of my portfolio. Do we think that investing offshore, either in US markets, Australian markets, I've heard that Australia could be quite recession-proof, that they won't feel the recession as much as the rest of the world. Are there other global opportunities here as well, not just local? I'm not sensing a lot of faith. Yes, Cay-Low, what do you have to say?
Just to jump in and also support what Chad said in terms of saying that people will continue spending money, people will continue buying. From a global perspective, the one point that I love looking at is buy now, pay later, right? I think that's one of the industries that probably back in the years wasn't there, but now that it's here, and understanding the fact that prices have increased, people can't afford anymore. Buy now, pay later can also, for one, actually create some sort of opportunity. But for one thing that's also concerning within that is the fact that we understand that there are regulations that are actually still hindering with this whole buy now, pay later. And that's, I think there are stocks within Australia, if not American market as well.
When you say buy now, pay later, what do you mean?
Buy now, pay later. So essentially what buy now, pay later does, it's unlike a bank, right? Because obviously you know that with a bank, if you need money, you're going to have to borrow. And obviously once you've borrowed, you're going to have to pay interest. On the other hand, buy now, pay later does not give any interest until you actually choose not to pay. That's when you're going to get interest on it, right? So say, for example, you choose to buy something. When you buy it, they give you like, I think they break it down into, I think 6 weeks. Yes, 6 weeks.
Every 2 weeks. Yeah.
Yes, every 2 weeks.
Over 6 weeks. Yeah.
Yes. And that, for one, obviously, if you look at people who have money and whatnot, that gives them the leverage to say they're able to spend maybe half of the money within the first month, knowing that in the following month, they're going to be able to cover up the other half.
Okay, that's very interesting. I like that. Okay, so I think we're gonna close soon. I just wanted to highlight that no one here has mentioned Recession, which is our #1 most bought stock from the EasyEquities community this year so far. It was definitely on my hit list. Number 2 being Purple Group, which I couldn't mention because I'm just so biased. It's always, like Cay-Low said, in my long-term buys. And then the other sort of 3 in our top 5 are the Satrix Top 40. It's a regular one for me in my TFSA, the EC10, which I touched on earlier, and Sasol. So just wanting to hear if there's any comments from you guys on those top 5 most popular stocks in the EasyEquities community this year.
I think from my side, around some of them, so I made a few notes with Recession, Purple Group, and Sasol. They've been in the news a lot. For various reasons. I mean, Recession with the helium also looking into list in the US. Purple Group, I think yesterday launched the life cover product, and also the last results showed the amount of clients and using the platform. And with Sasol, chemicals, oil price, Russia, rand hedging, and all those kind of things. I think what was mentioned earlier on is it's important to look at all these news out there, but also do your due diligence. Make sure you buy it at the right price, because many of these things good insights, but I think it's important that you buy it at the right price. With regard to the Satrix Top 40, I see a lot of us have actually seen that has outperformed a lot of our individual stock selection. And I think that's probably one of the years where ETFs are going to do well. This is from my side. Maybe this is what I wanted to say. And the EC10, I see Bitcoin went up, I think 8% yesterday. And it's from a very low base. So I'm not big on crypto, but definitely low base compared to the last 2 years. And I think there's opportunity there, perhaps.
Carly, I think oh, sorry, Rob, go for it.
No worries. I mean, I was just going to talk about Recession because I think that, you know, that's a company that's gone down 39-40% in the last year. And I think it's because there's been a lot of things happening, people resigning. There's been a lot of uncertainty over what it's going to produce. I think there's a massive resource there. And I think that it's going to be great at one stage. The point is that there's just a lot of things going on at the moment. And I think at this moment, there are, you know, safer places to put your money right now that can probably yield quite a lot. There's some great opportunities trading at, you know, 7 PE, 7 dividend yields. And I just think Recession, there's too much going on at the moment to be able to, you know, not worry that you're going to lose another 40%. It's very precarious. And I think that it's, you know, as fine as a smaller percentage of your portfolio to buy at what might not be the bottom, but I think that it's quite risky. I know Giulietta has some thoughts on Purple.
Well, actually, I bought Purple shares at about R1.80, so they are the blot on my portfolio. But I bought more because I thought, well, if I bought them at R1.80 and I believed in the story, and I still do, then why am I not buying shares at R1.30? So I snapped up a couple in the last week. I mean, I think Purple, to some extent, it ran ahead of itself. Maybe it was a bit of became a victim of hype. People were concerned that it just got too expensive, but I feel that the company is stronger or gets stronger. Its user base has increased. You can see Charles actually put out a comment on one of your blogs today talking about the number of trades are going through the system, and the fact that the system is sort of able to support these trades, which has grown exponentially over the last 2 years. So I'm backing Purple. But I think it's a long-term game, and I wish maybe I had bought all my shares at R1.30 and not R1.80. But I will suffer that loss gladly, in the hope and expectation that it pays off in the next 5 years.
We've just got to keep working hard, Cay-Low.
We're ready
So,
to
Carly,
Yes, Chad.
So, Carly, just to touch on that side, I mean, Purple, when I first started actively investing, to give you a bit of backstory, was during COVID. I always used to pay a broker, and they used to do everything, and they used to tell me how much money they lost me. So, COVID, and Purple was one of my first purchases at 50 cents. So you guys made me quite a lot of money over a year and a half. And as my first point came up, and it's come up a bit, is your entry and exit point. Same as with PPC was one of my first things, and Renogen too. So if I always say, if I did the Crystal Challenge in 2021, I think Giulietta, you were part of the original Crystal Challenge. Those Renogen, Purple, PPC, which I see on Twitter now, a lot of people are buying now. And I said, if you guys bought 3 years ago, it would have made you a lot of money. So yeah, it just goes back to that original thing. And then just to touch on that, and then I also want to add Sabaya into this in terms of the running of the business, which Rob spoke about. To have visionaries, as Charles is, as Renogen CEO, what's the surname of Italian guy? Yes, great ideas and stuff like that, but also we live in South Africa. You can't be a space cadet. We've got challenges that we have to fight every single day to keep a business running profitable and also making profit. So yeah, I must be honest, I was very shocked when I saw Renogen as your number one. But I guess renewables, all that stuff that the guys are jumping into. So yeah, just wanted to touch on that one. It's basically goes back to when you remove speculation out of a business, what is the business entirely? I think at the end of last year, Purple was trading on a PE of Tesla. So you guys, that's what you have to look at those things at the end of the day, as much as you love a business and believe in a business. And I just hope Purple comes back another 10% so I can buy it again.
Even me. Well, guys, I think you've made really good points today, and I think it is important for you guys to do your own research. We've got an awesome research portal which we add new notes to on a weekly basis. We've got expert analysis by Intellidex on ETFs, which, as Charles pointed out, could be the next big thing this year. And we've got our financial mail, which is full of really, really cool, interesting articles. I'm dying to read the latest one by the Finance Ghost, who I'm a big fan of. So guys, you've got all the resources you need out there. Go and do your homework and invest in more of the stocks you love. Thank you so much, guys, for joining us. It's been an awesome chat. We should do this again. I really had a good time.
Great.
Thanks,
everyone. Cheers.